Hello there everyone, today's video is all about the budget which happened yesterday, and I did try and upload a video at the time but it was far too long and it wouldn't upload, so I'm going to really condense this video, rattle through this, let's get going. Capital gains tax didn't go up as much as we had feared. In fact, the maximum rate of capital gains tax is only 24% to match the existing higher rate for residential property. So now commercial property in the higher rate will match resi property in the higher rate 24%, and the others will increase accordingly as well. If you're in the basic rate, it won't be 10%, it will be 18%, but maxing out at 24%. That's good. What about entrepreneurs relief, business asset disposal relief? We thought that was going to disappear. It's not going to disappear. It's sticking around at that 1 million level as well. So that hasn't changed. But what's changed is the rate, the favourable rate that you get within that banding. So at the moment it's 10%, and it will remain 10% on the first million until the end of this tax year, 5th of April next year, at which point it's going to go up to 14% for another year, and then the year after it'll go to 18%. So if you are selling your business, selling the shares in your business in a few years' time, yes, you can still get a lower rate on the first million. Okay, it's going to be 18%. It's not as good as 10%, and that's going to be less than the main rate, which will be 24%. So once you exceed your million, it'll be 24%. So capital gains tax, not as bad as we thought. Next one is corporation tax. No changes to the 25% main rate or the 19% starting rate. There has also been a corporation tax roadmap, which basically says no change to the rates in 5 years, or no change upwards. Hopefully there'll be changes downwards. I wouldn't bet on that. But basically that 25% will not be increased for the duration of the parliaments, which is good certainly for businesses. Annual investment allowance on plant and machinery, that also stays. That £1 million level on the annual investment allowance, that is maintained. Right, what have we got? National insurance contributions, the biggie, the one that raised the most, 25 billion a year. This will raise from increasing the rate of employers' NI from 13.8 to 15, but also the amount of salary of which employers will pay NI. Because at the moment, on a staff member's wage bill, the first 9,100 don't pay any employers' NI, and it's the amount between 9,100 and whatever the salary is that the employer's NI bites. So on that existing amount, an extra 1.2 plus the whole 15% on the slice between 5,000 and 9,100. The 9,100 coming down to 5,000, that is a cost of about 640 quid for every single employee that you have. It's going to cost you at least that much more in employers' NI. On the positive side, to counter that, the annual employees' allowance credit of £5,000 that every business gets, that's going to go up to 10,500. So you can quickly see the sort of the break-even position. Yes, you're going to get hit for extra employers' NI, but then you're going to get an increased credit. So you have to have so many employees before you're going to be worse off. And it's what is it? It's about 8 or 9 employees probably. Well, depending on what the salaries are, it could be less actually. But more than a handful of employees, you're going to be worse off because of these budget announcements. So this all kicks in not from today. This kicks in from 6th of April next year. The start of the next tax year is when you're going to see the hike in employers' NI. Right, what have we got? Income tax thresholds, no increase in the income tax rates. The government have maintained that they will freeze the thresholds that the Tories had already announced until 2028. There'll be no extension of that freezing, so they will increase the allowance rates for when higher rate, basic rate, additional rate, all those stepping points, they will go up with inflation from 2028. At the moment, they are fixed. Right. So fuel duty, that's going to be frozen for another couple of years. That's a good thing. State pension, government have committed to the triple lock, maintaining that triple lock introduced by the Tories for the duration of the Parliament. And next year, that will mean that the state pension goes up by 4.1%. So child benefit. Child benefit caused all sorts of headaches on tax returns, being clawed back. If you earn beyond a certain amount, you have to pay it back, and then they've increased the amount at which you have to pay it back on the last budget, Jeremy Hunt's budget. So a lot more families, had to earn a lot more before they clawed it back. But it's still an administrative hassle to have to do it via the tax system. So what they announced in the budget was that there is now the capability to pre-populate people's tax returns with the tax benefit data. The tax benefit that they receive will automatically go on, because tens and tens of thousands of tax returns were missing child benefit, and the revenue had to write to people and try and chase it that way. So now the data apparently is good enough that it's already going to be pre-populated. That's a good thing. Payroll benefits. The disappearance of the beloved P11D will be mandatory from 2026 to payroll all benefits. So no longer will there be a P11D at the end of the tax year. Right. Environmental EV, electric cars. So, company car, if you've got an electric car, 0% benefit in kind. That was due to expire next year. The government said, look, we'll give it another year at 0%, after which point it will go up. So you've got another year at 0% benefit in kind on electric cars. And when it does go up in a few years, it shouldn't go up that much. The government still are encouraging the whole green agenda. But anyway, another year longer than we thought at the 0% rate. Now, ISAs. There's a lot of speculation they're going to tinker with the ISAs before the budget. They will stay the same. So still the same mechanisms of how it works. Tax relief on ISAs. You put the money in, tax-free growth, tax-free extraction on the lots. The limits remain the same, 20,000 for an adult, 9,000 for a junior ISA. So no playing around with any ISAs. Pensions as well, pension tax relief. Talking about income tax relief, corporation tax relief. They will still be as they were. No changes, no restrictions on tax relief on the way into pensions. No imposition of employers' NI onto pensions. So business as usual for pensions as far as tax relief is concerned on the way in, and also tax-free growth. Same as it has been. Extraction of tax-free lump sum when you come to take your pension. That hasn't been abolished. That's still around for now. A long may it continue. 25%. You can still get your hands on that. What has changed in the pensions world is at the very, very back end, i.e. when you die. Since 2015, the pensions freedom that George Osborne introduced, you can pass down pension pots that are still there when you die to your beneficiaries, the kids, the grandkids, tax-free of inheritance tax. This will now end, and the government will say, okay, that will form part of your estate. If you're fortunate enough to die with a pot and you haven't extinguished that pot through careful living, prudence, fiscal management, you're not dying destitute. You've listened to your financial advisor. You've taken your 4% a year or whatever it is. The point being, you're left with a pot on your pension that unfortunately will form part of your estate for inheritance tax, and that kicks in from 2027. So a bit of time to do some planning around that. So the next big item really was the curtailment, the restriction on business property relief and agricultural property relief. Now, business property relief, if you are a owner manager of your own business, you're an SME business owner manufacturing your widgets, and you're a shareholder, and it's a family business, and you might have brought the kids on board. When you die, the value of the shares, it's a trading business, will not form part of your estate. And that's great. So then the beneficiaries don't have to sell assets to pay IHT on your share of the business. Now, what they announced yesterday was that for business property relief, as it's called, which basically is the jargon for tax-free on inheritance tax on business business assets when you die, including shares in your company, that will be restricted going forward. So you get the first £1 million tax-free, and then it'll be halved. So you'll pay 20% inheritance tax on the amount beyond £1 million. So that is quite a big deal. So that will have impact hundreds of thousands of business owners. When I originally saw this, I thought this is in relation to farmland, because in farmers you can get both agricultural relief, business property relief, and then actually when I looked at the detail, there was no mention that it was restricted to that. So it makes me think that this is applicable in the wider sphere to people owning SME businesses, which is a real shocker. So there are things you can do about it. One of them being gifting shares in the family business to the next generation before you pass away. Gift relief is a capital gains tax relief that wasn't abolished yesterday. That is a possible angle. So you would offload your shares to the kids before you die. Plenty of time. Defer. The gain gets deferred, and there is no IHT either. So that's just something, possible planning around that. But yeah, not good that this business property relief IHT is not going to be as generous going forward. Also, investing on the AIM shares. If you held stocks from the AIM for 2 years, that fell outside of your estate for IHT. Again, they're restricting the tax relief on that. So, the non-dom status we know is disappearing. VAT on schools we already know about. Interest on late paid tax. Tax. When you pay your tax late, the interest rate that HMRC charged was actually surprisingly low. It's about 2.25%. Going to slap on another 1.5% on that. Stamp duty land tax, SDLT, for those with second homes, buy-to-let properties, buying properties in limited companies. There is already a surcharge of 3% for any of those. That 3% on top of the regular stamp duty land tax rate will go to 5%. So an extra 2% on properties. This is second properties, so not your main home, but if you've got a second main home, you're more than one, or you've got buy-to-lets or properties in limited companies, an extra 2% on top of what you're already paying on your SDLT. So not great for landlords. The reason the government have done that, they said there's distortions in the housing market, and basically people can't get on the housing ladder, so they're going to try and discourage more private landlords from buying second, third, fourth homes or whatever, buy-to-let portfolios, get those right down, make more housing stock available for first-time buyers. That's the theory. Whether or not that will transpire remains to be seen. So, EIS VCTs, income tax breaks for certain types of investments, been around for about 30 years. They're going to keep going for another 10 years. The government have confirmed, extended out to 2035. Many high-rate taxpayers make use of EIS and VCTs to reduce their income tax. They will continue. So, there's your overview there of the budget, which was quite a tax-raising budget to say the least. 40 billion, and all sorts of different areas affected. Not good if you're a landlord. Not good if you are looking to sell your business, say in a year or two's time. Increased capital gains tax. Not good if you employ people, and you're going to be hit for an increased wage bill. And, it only remains to be seen whether or not this will lead to growth and productivity in the UK. Even the OBR, the independent body who sort of vets the government's numbers, they don't think that growth is going to be that great in the next few years, maybe 1%, 1.5%. So the government taking a real gamble with this. They reckon this will lead to growth, increase in productivity. A lot of people disagree, but hey, let's see what happens. Let me know your thoughts. Drop them in the comment section below. If you like this video, please do subscribe. And as always, I'll see you soon.